Siddharth Purohit and Ravikant Bhat joining us this morning. Let's get into this with them as well. Siddharth, let's first get your view. You just heard Dinesh Khara as well. A lot of excitement that's building up. What are you making of the price span of the valuations that we're set to hit the market with? Siddharth, if you can hear me.
Hello.
Yes.
Yeah, morning. Our view on the issue has been quite positive, and we have been recommending subscribing to the issue. There are a couple of points which we like about this particular issue and the company. I'll let you know that probably this will be one of the first and only listed pure credit card company in India, and very few among the global companies. Now, if you look at the last 3 to 4 years growth history, then possibly they have one of the highest growth rate even compared to the market leader. The strongest player in the market is SDFC, and they have been growing faster than SDFC Bank. If you look at the 4 to 5 years history, then SDFC Bank might have grown let's say around 18-20%, then they have grown much higher than that. Now, in terms of market share, they are the second largest as of now at 18% market share in terms of credit card outstanding or in force, whereas SDFC is almost 27%, and the management has clearly articulated they want to become the number one going ahead. That means there is a lot of opportunity for them to scale up. Now, when you look at the entire industry per se, the retail credit for the entire banking industry is something close to 25-26% of the outstanding loan book for the entire banking industry, I am saying. And when you look at credit card, it is just 1% of the total book for the banking industry. So that leaves a lot of scope for this credit card business for all the players to scale up. And SBI Cards, because of the parentage and strong brand name, I think they will possibly exceed the industry growth rate for multiple years going ahead, and that's what they have clearly mentioned in the meet yesterday. Yeah.
What is the scope of SBI Cards post listing? Can it be a DMart and a IRTC in making, because it has got everything which could be called as a mart? It's a business which grows without capital. It's got a unique proposition because it's the only listed credit card company available now in the only listed credit card company which will be available.
If you look at the entire financial services space, you won't come across a company which is actually delivering the kind of ROEs and ROAs that SBI Cards would be delivering. The only red herring I would highlight is it's a single product company, and therefore how well they diversify, or rather manage the risk, not diversify, rather, because they are going to do only cards business for years to come, most likely. So how well they manage the risk is something which one needs to look at. But suffice to say, you won't get these ROEs and ROAs in any other financial services player. And you're right when you say that it's not a pure balance sheet business, in the sense you have to keep adding capital every year. So it's a cash flow generating business in a way. So it could be. It would be interesting to see how well the valuations really can move up. And but yeah, going by the fact that they have been growing very fast, there still seems to be a scope, especially given the fact that they have begun originating quite a bit from the SBI channel also. They are likely to remain on top of the game. I don't know whether it can be a multi-bagger like a DMart, but it definitely will be there at the top in terms of premium valuations.
Siddharth, wanted to get in a take as to what some of the challenges are as well. They are vulnerable to some of the risks on account of failure of adequate adhering to by the employees. There's competition from some of the banks and NBFCs as well as payment banks. There's over-dependence as well on SBI and that 100% unsecured lending with no collateral. How are you looking at some of these key concerns, as well as the fact that the corporate NPAs are slowing down, and that poses a bit of a threat?
See, credit card is purely an unsecured business, no doubt about it, and it carries definitely very high risk when you compare to any other product. But historically, what we have seen is that while the default rates compared to other loan products will be higher, the rates are quite high, the yields are very high, and that's why the risk adjusted yield or the risk adjusted return ratios for credit card business across most of the banks and including SBI Card has been pretty high, which is not seen in any other banking services or even in NBFC. So while you might say that probably the risks are high, but it is equally rewarding in terms of ROE. Like you don't see any NBFC really operating at 30% kind of ROE for a multiple years. Maybe it can come down a bit, but I think despite the credit cost that is involved in this business has the potential to deliver 30% ROE. So probably market would not take cognizance too much into that risk factor. And one also factor is that now of late the screening and the acceptance of the or onboarding of client is done through a lot of artificial intelligence and based on this statistics. So certainly the quality of customer that you are taking on board is much better than what it was a decade back because of the technology that you have. So the default rates are naturally lower, and certainly you have civil rating and everything, so people normally don't tend to default so much on credit card. So I'm not really worried about the asset quality as of now and the much challenges as of now. But certainly, obviously, as this industry grows much bigger from here, maybe challenges can come from here. But look at the balance sheet of SBI Card. As of now, it's very small as of now compared to the entire NBFC space or banking space. So multiple years of growth is there. And when you talk about, let's say, even just to let me add on the valuation part, in the last 4 years, the company's PAT has almost gone close to 4 times, and in next 2-3 years it can double from here also. So the risk, whatever is there, it is being already being captured already, and that's why we feel that it's a very good value proposition for investors. So not worried about the risk part, rather I'm looking at the brighter side for the company and the issue, and that's why I'm positive on it.
And thanks so much for joining us then this morning. SBI Cards, all the coverage that you need and everything you need to know about that IPO that's coming up.